Good morning. You're watching the market right here on ET Now, and it is a good morning, right? Considering how we shut shop yesterday, thanks to that sole mover that was Reliance Industries. We'll of course discuss Reliance in greater detail, but look at the last hour surge. While to think of it, we were struggling around the 20,500 mark, even dipped below that level just day before. And then from there, we've seen quite a bit of perk up. On the spot Nifty, of course, we're back at that 21,600 level. Not just Reliance, you had the Adani names as well prop up, and ICICI Bank, which for the past two trading sessions was a big drag, that also recovered nearly about 2%. So yeah, with Reliance and ICICI Bank, we were surely taken care of.
So Aisha, you look at the first 2 weeks of trade, you're not off to a great start. You're off to a dull start, but you're not off to a poor start. So it's not great, it's not like fantastic, but it's not scary and it is not poor. But market broadly, and I'm speaking the Nifty language here, are stuck in a very well-defined range. The upper end of the range and the lower end of the range. You're going to the lower end of the range, markets are bouncing back. You're going to the upper end of the range, supply seems to be emerging. There are sliver of pockets where there is momentum, but there are a lot of pockets where suddenly the market action and the market momentum seems to be just evaporating. So this is the way I would look at the construct of the market, which is that at upper end of the range, you are getting resistance. At lower end of the range, you're getting support. You should never ever short a dull market. That's the first rule of Wall Street, first rule which I've learned over the years. So this is the market where you have to patiently wait for a bad day to time in, and you have to wait and you have to exit if you're a trader on 2 or 3 good days. There is nothing bad in the market, there is nothing exciting in the market, there is nothing scary in the market. It's a very simple market to understand.
Oh, yes, indeed. And yesterday was the comeback of some of those heavyweights as we witnessed in trade. But what's going on with the rest of the globe? You did have all the 3 major indices actually which managed to gain ground. There was a fresh release as well awaited in terms of the US data, the consumer price index, and for the Asian markets as well. You had Japan that has actually advanced quite smartly. It's extended its record-breaking rally. And you've got, for the most part, the rest of Asia as well, mildly in the green. But yep, for our own markets as well, it's interesting to note that the intraday high in this series has been 21,834. And as we're talking about, we're inching towards the upper end of the range. And now, with respect to what's going on within IT, expectations are muted, Nikunj, when it comes to numbers from the heavyweights like TCS and Infosys. What's the way forward in terms of the approach?
Okay, now you are reaching at the upper end of the range, and for the upper end of the range to be taken out, which is convincingly with flows or with news, I think 2 things have to work. One of the heavyweights has to chip in. It could be HDFC, it could be Reliance. Based on yesterday's price action, I think it should really be Reliance. If markets have to move higher, we'll have to do a lot of heavy lifting. And second, it has to be IT. So follow through buying in Reliance and surprise in IT. Just a mild indication that, okay, 2024 could be better than 2023. That's enough to take care of IT. That's enough to really, force the short sellers to run with, run for a short cover. I mean, right now, the bearish position in IT, I think it's not extreme, but it's on one side where nobody is expecting anything from that sector and nobody is expecting anything from Reliance. So can this combination of Reliance leading the market higher or IT moving, IT mild surprise coming in? I think that for me looks like the most logical combination which could take the markets higher. If you don't get anything from Reliance as a follow-up buying or a surprise from IT, then I think you'll be pushed back to the lower end of the range, and then you'll again get into this, okay, how much more, how much down? It's such a strange market, Aisha. You get 1 bad day, everybody gets curious. You get 2 bad days, everybody starts talking. You get 3 bad days, people officially say the bull market is over. It's that kind of market we are in, where everybody knows that from these levels, it's anxiety more than willingness to participate.
Yeah, a lot of impatience out there, which is in a way good.
Yeah, the problem is that you get a bad patch and suddenly you could see a slowdown and sell-off in mid and small cap stocks. That's my only worry right now, that you essentially sitting, I won't use the word time bomb, but you're sitting on, it's like in small and mid-cap stocks, nobody wants to sell and everybody wants to get out. And when the selling will start, the exit door is only one and it could become a crowded room. I don't think we are there yet. But for me, that setup, I think, is slightly obvious now.
Yeah. But you know what? It wasn't Reliance alone. There were a lot of movers from within the broader end of the market yesterday as well. I mean, look at a Delta Corp. Poor earnings, much along expected lines, but the stock shot up about 3.5%. Birla Soft was higher by 2.7%. The railway names made a comeback. So everything from an IRCTC to an RVNL, they were all holding out very well. So the last hour gainers had a bunch of these mid caps as well, which were pulling off their magic. But here's a special note. Today we'll have a very special voice as well join in, the BSE CEO himself, to talk about where the sector is headed. Of course, we're going to be taking his market opinion as well. He's going to be ET Now's special guest editor, where the top boss of the oldest and the only listed stock exchange in India so far, Sundaram Ramamurthy, dons the hat of ET Now's guest editor. So stay tuned for that.
All right, that's a very special show that you don't want to miss. But time to put the spotlight then on all that's going on across the globe. Let's find out what the top market experts are talking about, be it inflation, Bitcoin, or even what's going on in the Eurozone. Vinny's here to sum up all the global commentary. Vinny.
Good morning, and let's start some commentary coming in on the European Central Bank side. We have Pablo Hernandez de Cos, who's talking about that, Euro area seems to be in terms of probably failed to grow in the last 3 months of 2023. And that's a concern he's highlighting because that continued economic activity, that has not seen a strength coming in, clear weakness that is still seen there in the Euro area. And they're expecting that, this degree could maybe continue at this level in terms of the weakness that we are seeing. So keeping an eye out on that, still a concern that is coming around also in terms of GDP data that he's highlighting that has decreased by 0.1%, and available indicators suggest the stagnation in the fourth quarter as well. So yes, that's a concern that he's highlighting for the Euro area. Other than that, let's just shift commentary to Bitcoin, because that's surely been the news overnight that we've seen coming in, where obviously SEC has actually approved rules for changing some rules for Bitcoin and Bitcoin ETF. Actually, they've paved way for rules and changes for Bitcoin ETF, and concerns that have come in from Peter Schiff in terms of that in his tweet. He's highlighting that obviously other than speculating on normal Bitcoin, now Bitcoin ETF has come into play, which does bring in terms of more bets will be made, speculative bets will be made, and there are 11 Bitcoin ETFs that are actually coming into play. So because of that, more speculation he's expecting there, and he says that this doesn't actually give us any return in real time or any real world utility that it is there of Bitcoin like gold. So that's the concern he's highlighting. And lastly, we have a memo that has come in from Howard Marks as well. He believes the investment environment that we saw coming from 2009 to 2021 in terms of interest rate, that was quite subdued. But since then, we've seen central banks actually start increasing their rates, rate hikes that have taken place. So higher interest rate environment that has actually been shaping up. And because of that, now everyone has to follow different strategies which will outperform in the time period ahead because of higher interest rates. Thus, they believe that, asset allocation also has to be different from the strategy that an investor has had in the past. Now you have to have a different strategy. And what he says that unlike in the past that easy money was there, condition was there, that will come in but very temporarily because of the recession, but nothing interesting on that front. And he believes that obviously a very different strategy has to be followed going forward.
All right. Thanks very much, Vinny, for giving us a roundup of all that global commentary. But in fact, speaking about Reliance Industries that we touched upon, the fact that it was one of the big movers in yesterday's trading session. We will be just getting our technical experts' view as well on that. Nooresh and Kunal joining in right now, as always. Morning, gentlemen. And Reliance Industries really steering the way. But of course, as we highlighted, there were a whole host of other movers that propelled the markets higher. Kunal, did that come as a surprise to you? The 21,600 mark is where we closed at after hitting smart moves on the index.
Good morning, Avan. So I think, yes, I think that could be the only reason why I would probably change my stance in the very short term from being extremely negative towards maybe some bit of bullishness coming back into the Nifty specifically. So, even though in the last 4 days we've seen this pattern that the index has been making pattern of lower highs and lower lows, we've not broken below the, rather above the day before high of 21,720, 725 on the spot levels. In fact, yesterday's high was just around that 21,650 odd levels. So we are still 100 points away from the first swing resistance on the index, but just because of the move for Reliance Industries, a fresh breakout about that 2,600 plus mark for the stock, I think could probably give more impetus towards the benchmark indices. So would be ready to change my stance for Nifty from being on the sidelines, no trade, to almost a buy if we break past about that 21,700 mark today.
If we do it, if there is a if.
Yeah, there's an if.
What are the chances that
The probability is very high because Reliance has managed to finally fire up again.
Nooresh, have to talk about Reliance, ICICI Bank, the two stocks that propel the Nifty higher. Are they going to continue in momentum today?
So Reliance has clearly given a breakout. It has hit a new all-time high adjusted for Geo. Now this has happened after multiple attempts around the 2600, 2650 mark. So in such a breakout, we should ideally be targeting 2800, 3000 in the short term. And if we have a 10% move on the on Reliance, it ends up giving up a 1% plus move on the Nifty as well. Then we go to ICICI Bank. It's been holding on to the 980 mark, has not been able to recover really fast, but does not see any follow-up selling action beyond 980. So overall, if this can bounce above the 1040, 1050 mark, which is the previous high, that also adds up into the index as such. So if we have heavyweights participating, it creates a much more positive bias on the Nifty. So overall, till the time we hold 21,450, 500, the view remains positive and there is a chance for us to make a new all-time high again.
Okay, there you have it. That's largely owing to a lot of those Bay heavyweight contributors in trade yesterday. But let's find out the strategy then. And Kunal, are you sticking to the heavyweights?
Well, yes, and Reliance is, of course, it becomes the obvious pick after yesterday's breakout in terms of large caps. The stock breaking past about 2630 plus mark, which is the previous major swing high for the stock. 3000 could be the next target for the stock. So eyeing at least a 10% up move over the next 1 to 2 months for the stock. A positional buy with a stop loss at 2550. Voltas remains to be the strong mid-cap pick, which we highlighted earlier also. Yesterday, the stock managed to come back towards a fresh swing high, about 1010, 1020 or mark on the spot level. So expecting a follow-through up move for Voltas over the near term. 1100 as a target, stop us at 955.
Okay, and Nooresh, what are the stocks that you're betting on?
So again, the first bet has to be Reliance Industries given the breakout. Any fade off during the day should be a buying opportunity. A stop loss at 2600, target price of 2800 in the extreme short term. Second is a buy on Crompton Consumer. We've seen consumer durables go through a sideways patch, and now we've started seeing one by one many of them break out. So it started with Voltas, and now Crompton Consumer has given a breakout. Good momentum and relative strength in the short term. Expecting this to continue towards 360, stop loss at 315.
All right, there you have it. It's clearly looking at a lot of those large caps in trade. And speaking of the large cap that really steered the way ahead yesterday, Reliance Industries hitting fresh high, a life high after the last 6 months, as it was the top contributor on the frontline index. Let's also hear it out then. Commentary coming in from the chairman of Reliance Industries, Mukesh Ambani, at the Vibrant Gujarat Summit, talking about areas of investment going forward.
Specifically, Reliance will contribute to making Gujarat a global leader in green growth. We will help Gujarat target to meet half of its energy need through renewable energy by the year 2030. For this, we have started building the Dhirubhai Ambani Green Energy Giga Complex, over 5,000 acres in Jamnagar. Today, Gujarat is fully 5G enabled, something that most of the world does not yet have. This will make Gujarat a global leader in digital data platforms and AI adoption. 5G enabled AI revolution will make Gujarat's economy more productive, more efficient, and more globally competitive.
Okay, and let's discuss exactly that, Reliance. Samit is here in the studio to flag off Reliance and, of course, other stocks as well, which are the newsmakers this morning. Samit, what's the street verdict after the comment coming in from Mukesh Ambani and the way the stock popped up yesterday.
Yesterday it was up around 2.7%. It's biggest move that we have seen since July 2023. And I just checked some technical part, as Kunal was also mentioning yesterday. The stock is just about 8%. It's 50 DMA, just 12% about 200 DMA. So the downside also, if anyone goes into buying Reliance at this moment, would be limited as per the technical charts also. And never since 2015, if you see, Reliance Industries has underperformed the benchmark for 2 consecutive years. Now do remember in 2023, Reliance Industries had underperformed the Nifty. Nifty was up around 20 odd percent, while Reliance Industries was just up around 10 to 11 odd percent. Now can it outperform in 24? Well, there are multiple reasons. When it comes to the retail business, there is expansion that is there is fundraise that they have been doing, which will keep the debt in check for the retail business, and also the rising digital presence in the retail segment will boost the retail segment going forward. When it comes to telecom, the tariff hike, potential tariff hike will be the biggest trigger here. When it comes to the O2C business, which is the oil to chemical business, now performance has been range bound here. The company, the segment has been a cash cow for Reliance Industries and is expected to remain so at least for the next 7 years. When it comes to the gas exploration business, well, gas production is rising, gas prices are stable, the demand for gas in India has been increasing, so that business is also expected to be a cash cow for Reliance Industries now going forward. And when it comes to new energy business, the commissioning of one of its storage plant is expected by mid 2024, and analysts are expecting that this business will contribute significantly from calendar year 2025. What are the other factors? Now, if one has to play the India story, India growth story, then Reliance Industries is the best bet because it gives you exposure to retail, telecom, oil and gas, and new energy as well. Then there's this option to demerge the retail and telecom business going forward. Analysts are also expecting there could be some value discovery in the new energy business also going forward. And the key part, which CLSA also mentioned yesterday, was the deleveraging. Now, CLSA is expecting deleveraging in Reliance Industries to start from mid 2024, and at last valuations are cheap, and that too in a relatively expensive market. Now, if you see the 12-month forward EV to EBITDA of Reliance Industries, that stands at close to 11.6 times, while its 5-year average EV to EBITDA is around 12.3. So valuations are also in favor when it comes to Reliance Industries.
Okay, what we're discussing is why now, right? I mean, we had all the factors what Sumit mentioned. They existed 3 months ago, they existed 6 months ago. We're going to discuss why now. I look at Reliance, the technical positioning, and I'm looking at the ownership, and I'm looking at the market construct. It's been an underperforming stock, and it's a stock where you know that this year the market exactly are not very cheap in terms of mid and small cap stocks, and large capital allocation it will kick in. It will kick into a company which is cheap and where the margin of safety or the decline is going to be less. And by and large, most of the global funds are not overweight Reliance. So I think that's the setup for me which makes the near to medium term appeal strong for Reliance. Well, the other point, Sumit's beautifully captured that typically at the start of a new capex cycle, Reliance will underperform. When the capex cycle starts getting over, Reliance will start catching up, and that's really been the 15-20 year history of Reliance. And I think Mr. Mani alluded to the fact that the greenfield gas capex by the end of the year and beginning of next year they will start kicking in. So for me that is an indication that peak of the capex cycle is over. Also, Sumit, I feel that nobody is talking about the fact that this year many IPOs, many startups will go public. And if there is one group which has the highest exposure to startups and platform companies, I think it is Jio. There's a big media deal which markets are talking about, consolidation happening when it comes to Disney stake, completely, media report. That also could lead to a further spring in the stride for Reliance. So I guess the sheer fact that Reliance has underperformed, it has consolidated, markets need a stock which is large cap stock where margin of safety is there, and the way how things are actually moving on the capex front and also on the digital front, it could be a combination of a lot of factors. So I'm not saying anything new, with the exception that this year I think it really has a strong case to outperform the Nifty, because you need institutional appetite to move the Nifty. For Reliance, it's not like a small stock, but if Reliance moves, then the whole question of where the leadership in the market will come from, I think it's answered. For me, that's also a bigger question.
Okay, that's the take on Reliance. But Sumit, what about Shriram Finance? That's also got some upgrades.
Well, a couple of them coming in the morning. Firstly, from Goldman Sachs, they have upgraded their rating to buy from neutral and have hiked the target price to around 2,750. Now they're expecting better growth, profitability outlook as macro factors are now supportive. They're expecting the company's EPS to grow at a CAGR of around 22% over FY 23 to 26, and they're expecting credit growth of around 19% from Shriram Finance. Also, the asset quality, they're expecting some improvement on that front. front also. And when it comes to Bank of America, they have also upgraded to buy from neutral and have hiked the target price to 2,620. Now they are saying at this moment the valuations are reasonable for Shriram Finance. They're saying that the earnings cut and the worst of ROA is now behind Shriram Finance. Hence the stock could outperform now henceforth. They are saying that the company has a strong moat, which means that they have an extensive branch network. They have a credit evaluation which has been developed internally and has been supportive for the company going in past. They're also saying that the loan book is diversified after the merger with Shriram City Union Finance, and they're saying that Shriram Finance would be the key beneficiary of the turning rate cycle and the vehicle upgradation cycle. So these are largely the factors why both the brokerages have now turned bullish when it comes to Shriram Finance.
It's just a coincidence, right? I mean, too many upgrades have started coming on the entire NBFC sector. First from Goldman Sachs and second from NBFC, and second I think is from
Bank of
Bothra.
America. Yeah.
See, if interest rates they start picking out, NBFCs they start outperforming because the cost of wholesale borrowing goes lower, and when you are lending, how does an NBFC work? They will go to a wholesale market and they will borrow. If interest rates they start peaking out, wholesale cost of borrowing starts coming down, and at rate at which you are essentially lending, that could be a 5-year loan or 10-year loan, that loan gets repriced later on. So that's where I guess NBFCs they tend to outperform. But I would wait for the real macro picture to emerge. I think you have to wait for the RBI credit policy to understand whether genuinely interest rates have peaked out or not. Second, the valuation part. Look, NBFCs are very cheap, we pretty much know that, and within that if you look at CV and the combination of factors, I think Shriram is just an efficiently run NBFC where a lot of changes have happened of late. So I think markets maybe are waiting for some more numbers and some more guidance. Let's get an FY24 outlook and then I think markets would make a view. But I would feel that for Shriram Finance the downside I think is limited, and I think for me the real move will come only after Feb in NBFCs when we get a sense from Governor that interest rates have genuinely peaked out in the system.
Okay, there you have it. That's a view on NBFCs, in particular Shriram Finance. Amit, thanks so much for joining in and highlighting those stocks. Tell you what, we'll take a very quick break. When we come back, we discuss result expectations, stocks and news, and top market recommendations. Don't go anywhere. Back with the market right here on ET Now. Time to bring on board Sanjeev Bhasin joining in on the show. And Sanjeev, I think I can't help but ask about Reliance Industries. What a mover, hitting all-time highs yesterday. What did you make of that? Do you think that it's on track for further outperformance? There's more value unlocking on the cards?
Well, good morning, Awan. And, it puts to rest everyone's worry about the market not doing anything, the big boys not moving. Yesterday, it was all about Reliance and ICICI. So, like I said, give the market some space, let it consolidate. We've had such a sharp move. Mid-caps are seeing some consolidation, large cap. But it's about time the large caps move. By the way, the Japanese Nikkei has hit a 34-year high. It's up 1,600 points in 3 days. And it's telling me that, what was past and behind is now coming to fore. And I think Reliance is just starting a move. So 3,000 very much on the cards, 22,000 very much on the cards, 50,000 on Bank Nifty very much on the cards as Reliance, HDFC gather stream, and now you play on the indices rather than the mid-cap space. I think the indices have more steam than anything else right now.
Okay, fair enough. That's the view coming in on the overall market as well as RIL. And then there were reports coming in on the entire NBFC space, pretty positive for the likes of Shriram Finance. But across the board, what's your sense when it comes to an M&M Finance, Shriram Finance, given that two brokerages have given the thumbs up to Shriram?
Well, Shriram has been a clear outperformer on the back that in the second-hand market, they have only gathered steam. And you know that the delay in, the car supply because of logistic and semiconductor, it meant that the second-hand market was raring to go. Shriram Finance is one of the largest lenders there, and they've only gained market share across the board. It's an expensive stock. It has run up a lot, but it still be an outperformer. I would put my money on LIC Housing. I think as a mortgage lender, it went through a lot of underperformance. But now that underperformance is turning out to be outperformance. So I would say LIC Housing is one stock which I think in the NBFC stroke mortgage space is looking very, very attractive. I've already spoken about DCB Bank. DCB Bank is another, It's not an NBFC, it's a bank which is really changed its module of lending. And what L&T Finance is now gaining market share, DCB is already in those businesses of auto, agri and gold loan. And I think this stock, after so many years of consolidation, is looking very good at not even one-time price to book. So I have a target of 250 in DCB Bank. I think it could be the small mid-cap bank or NBFC stroke financial outperformer in 2024.
Okay, quite interesting. Kunal, let's spend some time on the charts on Reliance, right? Somit as well was flagging out data points. Where do you think Reliance is headed next? And because the downside could be maybe limited from here, can one look to add positions here?
Well, I definitely believe so, Aisha. And I'll go back to 2017. I think that was a point where Reliance came out after a 8 or a 9 year of maybe a 10-year consolidation, sticking to a range of I think 350 to 550 at that point of time, adjusted prices for the stock. And from there we saw the stock moving up into a ferocious kind of an uptrend. So the stock has a tendency, even this time around, for example, the stock has completed a 2 years of consolidation, sticking to a range of I think 2630 approximately on the upside, and closer to 2150 2250 broadly as a range for the stock in terms of the supports. So we've seen this tendency of the stock to get into a multi-year of consolidation and then heading towards a breakout. And post the breakout, the tenacity of the stock changes completely. We see the stock starts to trend in line or outperforms the benchmark indices. It tends to respect the previous key supports and doesn't break below those levels. And we see the volumes building up, participation also increasing for the stock. So we've seen this tendency multiple times for the stock over the last couple of decades. And I believe that we could probably be at a similar point where the stock may replicate that kind of a scenario. And that's why I would believe that it makes a lot of sense to add positions as well as hold on to the stock for someone who's bought at lower levels.
Well, from today, it's going to be all about earnings, and the big boys, the IT stalwarts, are going to start off the earnings season officially, where all the listed companies will be releasing their Q3 numbers over the course of next few weeks. In fact, TCS is at the forefront, so is Infosys leading the pack right now. So what's the street penciling in? Let me take it across to Anisha and figure out what to expect from these two numbers.
Well, yes, the earnings season will be kick-started with TCS and Infosys reporting numbers. It's a seasonally weak quarter for IT companies, so that impact will be there. But for Infosys, there could be a definite weakness in margins because of the wage hike pressure that will come from November 1st itself. So there'll be wage hike pressure, plus the fact that the guidance that the company had given for FY24 had very low ask rate for Q3 and Q4 tells you that there could be a potential decline in revenue for Infosys. The deal win momentum should be steady, but the management commentary going forward regarding the leadership exits that we have seen, plus is there any trimming of the guidance of Infosys will be important to track. The stock of course has run up in the month of December already. Let's see whether the earnings live up to that or not. Ditto can be said for TCS as well. It's of course expected to be better than the kind of numbers that Infosys, Wipro, etc. will post. But for TCS as well, there's going to be a very paltry growth in terms of constant currency. Dollar revenue might actually be a decline on account of the constant currency impact. Margins, however, will be held purely because there's no wage hike impact. Plus, the BSNL deal is something that will support the top line of the company, though on the margins it will put a bit of pressure. Deal wins are expected to be between $8 to $10 billion, and the management commentary going forward in terms of the headcount addition, the calendar year 24 outlook, the client budget expectations, and how this entire artificial intelligence opportunity will unravel will be important to track. But overall, the expectations from the numbers are subdued. It's all about the commentary this time.
Oh, yes, indeed. Let's find out what Moshe Khatri as well makes of it. Thanks for taking time out and joining in. I'm going to start off where Anisha ended, that more than the numbers and more than the expectations that it could be seasonally weak, commentary is going to be on top of mind for investors in Q3. Do you agree?
I do. I think this is going to be a muted quarter for the industry. As your colleague noted, this is a seasonally weak quarter for the industry in general. You have the impact of wage hikes, you have the impact of furloughs, FX could be an issue. It's interesting because I don't know if companies have a full view of calendar 24 budgets. So maybe the commentary will be relatively conservative about the next few quarters. I think when you look at the industry today, you do have to look at it from two different perspectives. One would be the next few quarters, that are seasonally weak. And then the second one is assuming we get to a point where the Feds are done raising rates and will start maybe cutting rates, you'll probably see better budgets for calendar 24, i.e. better discretionary spending. And on top of that, you also have to be looking forward for the conversion of the large deal pipeline that was won throughout calendar 23. The issue that we've had, what we heard from companies, is that a lot of those deals are not converting as quickly as expected. So they'll not necessarily be contributing to December, may not contributing to the March quarter, but we'll start seeing some of that contribution falling through the June quarter. And then the final point, I was reading somewhere there's about $16 billion worth of deal renewal activity that will be benefiting the sector throughout calendar 24. So again, these are all good, positive developments for the sector, but you're not necessarily going to see that reflected in the P&L probably until the June quarter.
Moshe, let's talk about TCS in specific. The ET Now poll suggests that they're likely to maintain their deal win run rate of about $10 billion. Do you think that the improved utilization will be able to offset the BSNL deal impact?
It's possibly. It is all possible. But again, the headline's going to read, 8 to 9 billion, which is what you're saying in terms of bookings. But again, the question should be, when do we start seeing those conversions coming through? And as I said, I don't think that happens before the June quarter.
Moshe, if this entire debate on AI versus traditional IT is there, do you think in hindsight, when we would be discussing this in 2025 or 2026, this would be passé? I mean, it reminds me of similar conversation a lot of folks have had when Y2K got implemented, or for that matter, when IT companies, they moved from enterprise to SMAC and SMAC now to digital.
Yeah, we view AI as a really important, I would say, tool that helps you more on the, on the cost takeout side of the business. And in our view, this will continue to be viewed this way. As you indicated, the industry itself has been very effective in terms of looking through automating some of the more mundane functions. This will be another productivity tool. We are hearing that AI-related savings are beginning to get incorporated in deal flow, in RFPs, where actually enterprise clients are looking for, cost savings that are AI-driven. I think this will probably get you another one of those cycles, good cycle, I would say positive cycles for the industry. Remember, cloud was a cycle. Initially, everybody worried that cloud is going to cannibalize revenues. It hasn't really happened. And I'm assuming AI is also going to get you that, revenue growth cycle for the industry. Is it going to be as significant? It's too early to know. But I would say that the industry will know what to do with it and how to sell it to clients and ultimately generate incremental revenues from that.
Moshe, appreciate time. We always accommodated our interview request. Doesn't matter, it's late night, early morning for you also. So really appreciate that. Prasin Saab, how would you address Polycap? Unusual. 1,000 crore rupees cash mila. Right, wrong, I'm not getting into that. I'm simply putting facts on the table. It's an expensive stock. It's a stock which was commanding a high premium because of growth and because of comfort from management. When you see a news like this, it will have impact on the stock.
Good morning. Definitely, Nikunj, corporate governance has to be of the highest standard, irrespective of the business or the module or the wealth creation. But, such things definitely will not be, cannot be kept under the carpet. And I think they will have to come out with a large part of disclosure. Now, I am not privy to what has actually happened, and it would be wrong on my part to comment. But I definitely think that corporate governance at 22,000 has to be the key. So be watchful of, that is why we are saying certain mid caps have also made a lot of noise. Be watchful of the actual facts and start. That is what we are saying. Be overweight on the index because you have enough large caps there which have cushion of corporate governance, visibility, transferability, and everything which keeps you participating, and where market will again reward you over time. This polycap thing, I think I will reserve my opinions as the case plays out, because it is involving the tax department, but it will definitely sour the sentiment on some of the large cap, mid caps, which have been huge outperformers.
Okay, let's shift gears and talk about IT. Now let's look at the positioning of IT. IT is one sector where expectations are just not there. It is the only sector where everybody is expecting a sequential decline. It's a sector where general view is that AI is going to be disruptive. It's a general sector where 2024 nobody is expecting any big change in terms of IT outsourcing or IT spending. That's the backdrop for IT. Now when there is gloom and doom and little expectations, little bit of trajectory change also can really make a lot of difference. I have realized over the years that I used to always think, Basin Saab, that IT companies are a structural businesses which you can predict. But sometimes they are more volatile than even predicting commodity cycles. Look at 2021, we all thought that the world will become digital. IT companies were, in a sense, growing at a rate which was hard for even best of the bulls to imagine. Come 2022, realization comes in, and in 2023, rather than markups, we saw only markdowns. I mean, in 18 months, IT companies have seen a boom and a drop.
Correct, Nikunj, and it's very difficult if you have to, predict the trajectory. You rightly said, COVID became the biggest benchmark because home working, reduction in cost, plus digitalization all added to revenues like never before. And then you suddenly had the Ukraine crisis, escalation in oil, inflation going through the roof, disruption in semiconductors, interest rate, 11 hikes. And all that meant that IT stocks, it's just mimicking the NASDAQ, which after a huge run-up fell almost 50%, is back 70%. So trajectory plotting is very difficult. Only thing is that this is a business which is universal for India. Outsourcing is a very big theme. Cash-rich companies which have diversified the model and which are nimble-footed. I think now with ease in inflation, ease in US soft landing, all that bodes well for the large cap. So stay with the best of the best, and we continue HCL Tech, Wipro, Persistent, Coforge, LTTS. These have a very, very good pipeline business. And by the way, Nikunj, actually, mid-cap IT has far outperformed the large-cap stocks. And now the valuation comfort is more on some of the large-cap players.
Okay, fair enough. That's the view coming in on the entire IT basket. Meantime, let's also get in a take then, Sanjeev, from you as to what the outlook is when it comes to Zomato. Pretty interesting notes coming in this morning that that the long-term view continues to remain very constructive. Earning upgrades are expected. What's your sense on how the stock has panned out? It's been pretty healthy, but at 135?
So I'll give you a little ground reality. Like I told you, my son's restaurant in Gurgaon has Zomato, which was making 25% margin. And 2.5 years back, he was not making money, but so I invested half of the capital in Zomato, and that has made more money. But now he tells me that Swiggy is doing extremely well. I'm just giving a brief. Swiggy is getting very, very competitive. It is giving much more bang for the buck. And he is very, very happy with the new change of business with Swiggy. So I think both these businesses are, it's a duopoly. I think there is enough room for them to grow. They have been innovative in their AI and other approaches. There is even talk of drones being used now in order dispatches and so on. So, fintech and this food is doing extremely well. We have it in our portfolio, and we continue to be very bullish. But, Avan, I also want to reiterate my bullish stance on Paytm and PB Fintech. I think these are two quality fintechs which must be in your portfolio. Irrespective of the price, the business model is super.
Nooresh, you hear Nooresh and I get a smile. That's what I like about it. Nooresh, see, we forced you to smile every time I call out your name.
Yeah.
What a great year it's been, Nooresh. See, हम आपको हंसा देते हैं सुबह सुबह, और I'm sure our viewers are also smiling because they see you smile and they get to stock ideas, right, Nooresh?
Hopefully.
Nooresh, Vedanta, pure technicals here. Breakout yesterday, high beta. Forget what the news and what the debt issues are. For a trader, is there money to be made in Vedanta? Could Vedanta do what Reliance did yesterday today?
So a very interesting chart and price action yesterday. So yesterday the stock had a gap down, recovered well, and closed very well, almost towards the high of the day. Now, if you look at the last time it saw a gap down, before that it was around 270-75 levels. Then over the last 2 weeks, there have been two attempts around the 270 mark. So if it can sustain about 270, it could surprise on the way up. And the stock chart gets distorted by the fact that it has given huge dividends. So on a dividend adjusted basis, also 270-75 is a major breakout. So technically positive, looking at it as a trade in the short term. Say the risk reward is good. Given the high beta nature of the stock, one would keep a stop loss below 255. And if this moves out, it could go all the way towards 300, 320.
NBFCs, Basin Saab, there are two notes in my hand, one from BofA the other one is from Jefferies. They feel that interest rates have peaked out and time to revisit NBFCs. Is it a good idea? Sell your PSU banks and buy NBFCs, the big ones?
Well, I would say take it with a glass half full, because you must add some of the NBFCs or the small medium banks which are doing well. And yes, PSU mid-cap banks, but I still think State Bank has way to go. This quarter numbers will be very superb. Last year, State Bank did a net profit for FY23 of 50,000. This year it is 63,000 in FY24, and next year it will be close to 80,000 crore. So you cannot miss the large cap giant of SBI not doing. I think SBI is still the most undervalued stock in the entire banking pack. At 1.9 time, a balance sheet of 52 lakh crore and a housing loan book of 8.5 lakh crore. I would still with State Bank. LIC Housing and AB Capital are two stocks in the NBFC space which are in our portfolio, and we think they can be outperformers. And DCB Bank, that is our small cap dark horse, which can be a huge outperformer this year.
All right, thanks so much then for taking time out and joining in. Good to have you on board, Sanjeev, as always. All right, let's move right on. And the latest IPM data is out, and the Indian pharma market is seen growing at about 16.5% into December 2023. Let's understand the analysis then from the Indian pharma market, the kind of growth that we've witnessed so far, and December looking very encouraging, Vamakshi.
Well, yes, the Indian pharma market report is out, and in fact, in the month of December, the Indian pharma market has actually grown by almost 5%. Keep in mind that in the month of October, the growth was at around 16.5%, and in the month of November, it had dipped to as low as 3.5%. But in the month of December, we're definitely seeing an improvement of almost up to 5%. Now, let's talk about specific therapies within the Indian pharma market. Acute therapies seem to be struggling. In fact, in the month of December, acute therapies managed to grow only by 3%, while chronic therapies actually grew by 8%. Anti-infective and respiratory therapy growth has seen a bit of a slowdown, but nevertheless, when we look at cardiac, it is the fastest growing key therapy with almost 8% growth. Anti-diabetic therapy growth is at nearly 5% in the month of December. However, this is showing an improvement as compared to the last month. Now, let's also look at company specific growth that has come in on a year-on-year basis. We're seeing some very strong growth as far as Cipla and Mankind is concerned, nearly 9% up. Apart from that, we also have JB Pharma reporting a nearly 13% growth. We have Sun Pharma, Alkem, Dr. Reddy's and Irislab also reporting good growth numbers. Now, amongst the MNC pack, however, GSK has reported a negative growth, while Sanofi has actually managed to post a growth of almost 14%. Lupin has in fact improved 2 ranks to reach nearly the 7th position in monthly data, while Sanofi has also improved by 1 rank in the MET data. So largely on the back of this update, we have all of the pharma stocks in focus today.
All right, let's bring on, thanks very much Vamakshi for that. Let's bring on board Hemang Jani as well, who's joining in on the show. Hemang, good to have you on board. Thanks so much for joining in. It's pretty interesting, getting into some data with respect to air travel and how it's nearly at, the pre-COVID levels that we've seen. And of course, if you go to the airport at any point in time, the crowds really speak for themselves. Just capitalizing on this theme of travel, hospitality, the government of India focusing a lot on domestic tourism. momentum. How do you want to play that from a stock market perspective?
Good morning, Avan. I think the entire tourism theme has played out so very well in the last 1.5 years. And what is very interesting is that there is no slowdown or any kind of a moderation in the expectation when it comes to the hotels or the airlines. And I think the event at Ayodhya again is adding to the fervor, and we think that overall that theme will continue to be good. Now, how do you play this theme? I think hotels continue to be at the center stage of this, and Lemon Tree Indian hotels are the names that we like. Aviation, apart from the fact that the air traffic growth has been good, I think international routes and the price having corrected from the top has played in terms of positive triggers. So Indigo, and to some extent for those who are looking for a little bit of high beta play, I think SpiceJet provides a good entry point with a low market cap. 2 rounds of fundraise has happened, which will surely help. So I think overall this theme will remain extremely good even for 2024.
Were you rubbing your eyes with disbelief, Himang Chani, when you saw that move in Reliance? Aisa kya ho gaya? Suddenly 60-70 rupees higher. Are we missing on something, or this is just a technical breakout?
Nikunj, Reliance has actually not participated in a meaningful way in this entire rally. So you will see at some point kind of catch up happen. Also, this being a stock with a very high weight on the index, sometimes, on let's say expiry days, it has its. I think from a purely valuation perspective, and given the incremental, growth drivers in terms of, the geo, the ARPU increase, the oil, vertical starting to really deliver good numbers from here on, I think will surely help. So as an investment, I would surely look out for some of the large caps, and within that, Reliance will surely feature.
So what should one do then? Just let's say move 5-7% portfolio to Reliance. Do you think it's a good idea in the large cap stocks? Maybe sell some defense names, maybe sell some railway stocks, and just move into this large cap stock now, Himang?
Because it's always going to be tricky when you try to, sell some of the best performing mid cap, small cap companies. Though in terms of valuations, one does get a sense that they are kind of in a bubble zone. But I think it would be surely sensible to really move into, either some of the, let's say, large cap names which have not performed, or some of the defensive names, be it pharma, to some extent, NBFC, which has been a sector which has really not done that well. Surely it will make sense. Maybe a 10-15% increase in allocation to large caps would surely be a sensible thing to do at this point.
I'm just going to shift from Reliance and move to some other stocks where there was a lot of volume action yesterday. And one stock, Kunal, which is popping out is NCC.
Yeah, Nikunj, and I think it's done exceptionally well. So, NCC was a stock which I remember very clearly, I think was stuck at 66, 67 for years. I think the 2007-8 high for the stock was around this levels. In the recent high, the stock was at a point where it failed to break out that 66, 70 odd mark for itself. But the moment the stock touched the 3-digit levels, we've actually seen NCC going into a strong trending stock. You've seen volumes being very consistent. It's not that the stock has seen an abrupt change in terms of volumes, but the volumes have been very consistent whenever the stock has moved up higher. What I also like about the stock is the beta nature of the stock, which has changed dramatically. NCC was considered to be a very high beta stock over the last many years. The stock used to move into gyrations of more than 15-20% in just a matter of few days, both on the upside as well as on the downside. That's now abated for the stock. We've seen the stock graduating into a very slow, consistent mover. Whenever the stock wants to get into or gets into an overbought phase, it spends more time, consolidates more rather than gets into a major price correction. I think that's a hallmark or a quality for a stock which is moving into a next level of uptrend. I would believe that the stock should continue to move up high in such a consistent manner. I wouldn't be surprised that in the next couple of years, even the stock touches levels of 250, 300 plus also.
Again, just zipping through some stocks where price action was large or there were any breakdowns, just for the benefit of our viewers. And Nooresh, one stock which Kunal likes but has gone below its 200 DMA, and that's Aditya Birla Capital.
So, AV Capital, if you look at the chart, it has been a slow and steady downtrend over the last 5-6 months. Made a bottoming out formation and has come to the upper end of the channel. So, in this channel, if it sustains about 180, that would be a breakout. So, for now, it's a preemptive buy wherein you expect that breakout to take place, and the bottom is already done. So, one would keep a stop loss around 165. But I would be more comfortable buying on the way up about 180. Because the longer term trend has been positive. The stock crossed above this 160 mark, which was last seen in 2018-19 levels. So out there, the trend is positive, and we are seeing a good trend across the whole space as such. So out there, watching out for a sustained move above 180 to take a confirmation.
Okay, there you have it. That's the view coming in on some of those movers in trade. Meantime, Hemang, let's also get in your outlook on what the outlook is when it comes to the entire NBFC pocket. Owing to the kind of positive brokerage notes that we've been getting, is the sector in a sweet spot, more upside?
I think, Aman, ever since the RBI came out with the higher risk weights, and particularly for the unsecured loan, there was a nudge to slow down. I think from there on, we've seen a bit of an underperformance. But now things are stabilizing. So for some of the companies where the quarterly earning expectations are very strong, we should surely look to participate in those names. So Poonawalla FinCorp is something that we've been liking, and we think that this quarter company will report about 30 to 35% kind of a growth in terms of top line and even post-provisioning net profit. So selectively, we would surely be looking to add into the NBFC space. LIC Housing is another stock which would deliver very strong quarterly numbers. Overall, we continue to be very selective, but these two names will deliver good, strong growth in this quarter.
There you have it. That's the view coming in from on some of those NBFCs in trade. Meantime, it's apart from Reliance Industries as well. In yesterday's trade, you did see quite a bit of contribution coming in from some of the other heavyweights in the session. But wanted to, Hemang, get in your thoughts just how you're placing yourself within the mid caps versus the large cap stocks for the year ahead. Do you believe that some of those large caps that have been lagging are only going to take leadership, or that it continues to be a strong game ahead for the mid caps?
I think mid caps, surely the trend is still intact. The retail money is flowing through, and that will help. Only thing is that one needs to be a little selective, and rather than chasing some of the momentum stocks, we'll have to do a little bit more work in terms of where the value is or where the growth potential is better. But from a risk reward perspective, incremental money, I surely think that we should put into large caps. Let's say banks where the valuation comfort is very much there. The numbers are looking quite good for this quarter. So I think it would surely make sense, if you want to have a peace of mind, go with larger component of the large caps.
Okay, there you have it. That's a view coming in on some of those stocks. Meantime, Nooresh, let's understand your outlook on some of the auto majors. What's the view on Tata Motors, given the kind of trend that we've seen, a Bajaj Auto, M&M?
So something like a Tata Motors and Bajaj Auto are overdone in the near term because the momentum has been strong. It's been a slow and steady move across the board over the last 6 months. So if you look at Tata Motors, it gave a breakout around 450 6 to 8 months back. The stock has almost come to double. So at current levels, you want to keep a trailing stop loss and ride on to the position. So for now, a trading stop loss for Tata Motors would come closer to 770 and continue to ride on to the position. Same with Bajaj Auto. The only case with Bajaj Auto is the fact that it came out with a big buyback announcement and the price action topped out around that area. So that's generally an indication that a short-term top is in place and we could go sideways. So out here, the only play in, say, the whole auto pack is Maruti, which has been the most sluggish one. The stock gave a breakout about 10,000 and still quoting around 10,000 levels. So in terms of risk reward, the best bet right now is Maruti.
Okay, let's get a move on then, and also getting a check from you, Hemang, as to what the outlook is from the pharma sector. Just a short while ago, my colleague Vamakshi was, highlighting some of the trends as well coming in. That December has been a fairly healthy month. Where is it that you're seeing, growth within the entire pharma space? What are the stocks that you would be betting on?
Pharma has seen a very strong rebound, and the incremental data from the US markets are also suggesting that the pricing has stabilized. Domestic market, we continue to see reasonably decent growth. So we would go with the large cap, something like Cipla and Sun Pharma and Dr. Reddy's, where the regulatory issues more or less are now behind them. And within the mid caps, we would surely look at Laurus Labs because this API, we are seeing stability, we are seeing incremental volume coming through. So surely some of the API-based companies, be it Aurobindo Pharma or Laurus Labs, surely we would have a positive bias there.
Okay, Hemang, we'll let you go on that note. Thanks as always for taking the time out and joining in. Let's discuss some mid-cap ideas as well on that note. I know we've been talking about large caps and the Nifty recovery, which seems like is going to continue this morning too. But Kunal, what's on your mid-cap list?
So it's a mid-cap name, Max Healthcare. The stock yesterday came back towards a fresh swing high about that 730, 735 mark. So would suggest a buy, expecting this consistent uptrend to continue for the stock. Targets of 800, stop loss at 700.
Right. Nooresh, what about your mid-cap strategies?
So that would be a buy on AIA Engineering. The stock gave a breakout into new all-time highs yesterday. Stop loss at 3,600, target price of 4,000. Good volumes, and this has been a secular uptrend stock. Goes through sideways phases. So classical triangle breakout yesterday. Expecting follow-up momentum today.
Okay, let's tell you what else is happening outside the world of markets. And as Israel's war in Gaza continues to rage on, the International Court of Justice will be holding hearings on Thursday and Friday, that's today and tomorrow, against the country. South Africa has claimed that Israel's war against Hamas militants in Gaza violates the 1948 Genocide Convention. The World Court hearings will deal exclusively with South Africa's request for emergency measures, ordering Israel to suspend its military actions in Gaza. Also, in a big boost to the crypto market, the US stock market regulator has approved Bitcoin-related ETFs amid rising investor interest. Among a dozen companies, including BlackRock, Fidelity, Grayscale, sought to create Bitcoin ETFs, and some of them have also slashed the fee they plan to charge investors. An e-commerce and tech giant Amazon will be laying off several hundred employees in its streaming and studio operations. Amazon's layoff comes in after they said that they have identified opportunities to reduce and discontinue investments in certain areas. They currently aim to increase investment and focus on content and product initiatives. Also back home, in a chilling saga, North India continues to battle a relentless cold wave as even Punjab, Haryana, Delhi and Chandigarh continue to shiver as dense fog blankets the mornings. 24 trains to Delhi were delayed because of poor visibility. Central and eastern regions anticipate a 2 to 3 degrees Celsius temperature drop in the coming days as well.